Hey, how's it going, subscribers? Welcome back to this brand new video for today. So I'm going to be talking about how I made money on a very red day in the overall stock market. This Friday was a pretty bad day because we've been in a situation with China where we've been wanting to place tariffs on them, and we have. And now China is retaliating with us by putting tariffs on us. So it's getting pretty bad, and the news came out on Friday, and this affected the entire stock market to go down. But I actually made money. It's kind of a myth that when people say that you only make money when the stock market goes up, there's actually a lot of ways where you can make money when the stock market goes down. So it's just a limiting belief. Don't believe that you can always make money even when the market's good, when the market's bad. Any situation, you can always make money. It's all about gaining your knowledge and expertise in the stock market. Alright, so let's go ahead and get started. So this is my Robinhood account, and I'm going to show you which stocks I traded and how I made money on a red day. Alright, so here we go. So VOO is the Vanguard S&P 500. It's an index fund that basically mimics the S&P 500. So as you all know, Friday was a very bad day. It went down, I think it was 3%. Yeah, 2.52. So it was a red day. It went from 268 all the way to 261. So it was a red day on the day chart. And whenever the S&P 500 goes down, there's actually specific stocks that are called shorts, where they actually do the opposite of the market. So when the stock market goes down, the inverse goes up, and when the stock market does well, the inverse goes down. And so what I basically did is I traded the inverse of the S&P 500, which I'll show you in just a minute. So this year has been pretty rough because we basically made no gain in the whole year chart. So we started basically at the same price point as we are right now. We started at 261 and we're still at 261 even after some volatility. So this kind of shows you why sometimes even though in the long term the stock market goes up, I always recommend people to invest for the long term. But sometimes we're going to have years where we don't actually make a higher high in the overall stock market. So your stocks are probably flat or pretty much breaking even from when you bought them, if you bought them a year ago. And this is a line that I'm drawing. And this is kind of showing how flatlining this entire year has been. We've made no increases in share price pretty much for a whole year. So this is why I love swing trading. And so I take advantage of volatility in the stock market, which we've been having a lot of recently. And how I made money today on the red day was actually just a day trade. So based on Friday's news, where Trump tweeted to tell the U.S. companies to start looking elsewhere to do business with. So don't do business with China, basically. That's what he was saying. And this is kind of shocking for all businesses in the United States because we depend on China so much. And so this is QQQ, which is basically like the NASDAQ, all combined into one, but it basically looks like the S&P 500. So it's kind of the same thing. So this is the overall stock market pretty much. This goes up when the stock market does well, and it goes down when the stock market does bad. So on the day chart, it went down. But then there's SQQQ, which is the inverse of QQQ. And this one goes up when the stock market goes down. So you see right there on the day chart, it actually went up by like 9 or 10%. So you could have made 10% on a single day just by investing in this stock. And this is how I made money today. I took advantage of this stock because I knew that Friday is going to be a red day based on the news and everything like that. So that was kind of my reason why this stock was going to go up. And you see here on December, it went up by a lot because the stock market was doing horrible in December last year. So this kind of shows how it did bad. And this one overall in the MAC chart, it keeps on going down because the stock market naturally goes up over time. So this stock will always go down no matter what. It does have times when it goes up, when the stock market does bad, but it doesn't last very long. And this is definitely not a long-term investing strategy that you should be doing with this stock. This is only for day trades or swing trades. And so those were my buys in SQQ. This is how I made money today. And I'll go in depth on my cost and the different shares that I bought at different price points. And there's also different inverses as well, like DGAS, UGAS. This trade on the commodity of natural gas. So one of them is pro natural gas. The other one is like the inverse of the pro natural gas. So it goes down. So UGAS might go up that day, and DGAS will go down. But DGAS could go up the next day, and UGAS will go down. So they kind of do the inverse of each other. So when one's going up, the other one's going down, and when the other one's going down, the other one goes up. So this is how these play out. And in case it's your first time hearing about inverses, it'll take some time to get used to them and learn more about them. But it's pretty cool because you're able to make money no matter what on any economical circumstances. Another thing I forgot to mention is that SQQQ, the one that goes up when the stock market goes down, it is 3 times leverage, meaning it reacts 3 times as much as it normally would. So QQQ went down 3%, and since SQQQ is 3 times leverage, it actually went up 9% because whatever the stock market did that day, it 3 times that effect pretty much. So if it went up, it multiplies by 3, but on the negative side. And if the stock market did bad, it multiplies by 3 on the positive side. So it's something you need to consider when investing because these stocks react very heavily. Like today, it went up 10%. But this is also a good opportunity. So I traded this stock 2 times. So it took basically 2 day trades for me to get my overall profit for this stock, SQQQ. And so basically I'm calculating the cost right now. I mean the profit for the second day trade, and then I'll show you the first one. So basically you subtract the sell price minus the cost, and that gives you the profit. And I have all the buys right there, how many shares I bought at what price point. So let's go ahead and do the math. Alright, so 32.29 profit, and this was the second day trade, and then I'll also show you the first day trade that I did. So the second one was when I actually made money, the 32.29. The first day trade, I didn't make that much, but I was kind of just testing the waters, and I'll show you the buys for those. And like I said, I buy 1 share at a time, 1 by 1. Once I'm up on the position, I buy another share, and then if I'm still up on the position, I continue buying. As long as the price continues to increase, I'll continue buying 1 additional share at a time. If the price ever goes down, the price that I bought at, I definitely stop and don't buy anymore until the share price is higher than my average cost. This kind of puts me on a safe side when it comes down to investing, and pretty much there's no way I would lose money by doing this, because I also set up a stop loss which automatically sells my shares at a specific price that I set, and I always put it on higher than my average cost. So as long as it gets nearby that, it automatically sells without me having to place the order. So if we take the 32.29 profit and we add it to my first day trade on the stock on Friday, the same day, I'm gonna do the math, but these are all the shares that I bought at different price points. basically one by one at different prices. I keep on buying them as long as the stock continues to go up in value, and this puts me on it's kind of like my safety, and puts me in a position where it's really hard for me to lose money by doing this. I'm actually a very conservative investor, so I make sure that I lock in profits, even if it's $20, $10, $15, $20. Profit is profit, and it overall helps your total return in the stock market. So that's why I'm a huge believer in locking in your profits. All right, to basically sum this up, on Friday, from my day trade, my 2 day trades in total, in SQQQ, which is the inverse of the stock market, I was able to make 41.29 profit from a day trade. So not too bad, and I was doing all of this while working, so pretty good. That's just additional income that I get to save and invest for other stocks in the future. And this puts me at $150 profit for the week from trading stocks this week. So pretty good. It's basically a lie that you can't make money when the stock market goes down. There's always opportunities everywhere. You just have to look and examine the different opportunities that you have and take advantage of them. So thank you all so much for joining me. I'll see you on the next video. Peace.